Let me now turn focus to what's happening on GDP. Yesterday, we brought to you a detailed analysis of the GDP numbers for FY21 and the fourth quarter of FY21. Meanwhile, just a day later, forecasts for FY22 have been slashed considerably, both by Moody's and State Bank of India on the same day. So State Bank of India has cut its FY22 GDP estimate to 7.9% from 10.4%. Moody's has cut to 9.3% from 13.5%. What are the factors that could perhaps lessen the force of the second wave, which is clearly behind this outcome and these forecasts? To speak on that, I'm joined now by Pronab Sen, former member of the Planning Commission, Upasna Bhardwaj, senior economist at Kotak Mahindra Bank, with us on the show this evening, as is Indranil, chief economist at Yes Bank. Welcome to all of you. Great to have you on the show. Mr. Sen, let me start by just getting your take on the forecast and on FY22. FY21 is now behind us. It's showing us that there was perhaps a slight recovery in Q3, Q4, and the second wave may have put paid to it. Do you agree with the view coming in from the Finance Ministry that the damage will be lesser post the second wave as compared to the damage to the economy after the first wave?
Tamanna, I think there's a bit of a leap of faith in that. The nature of the damage, or the cause of damage, is different. Last year, it was a lockdown. We were down for 9 weeks. It was certain. It was across the country. So the damage was easily calculable and it was limited. This time around, it's much more complex. The damage is coming essentially from a huge increase in uncertainty that has happened. There is uncertainty about the progress of the pandemic. There is uncertainty about the nature of lockdowns, both in terms of duration and location. And as a result, normal business decisions, particularly business decisions which involve supply chains, are going to be under enormous stress. So although in the brief period of those 2 odd months last year, the damage was massive, and over that, the 2 months, the corresponding 2 months of this year, it may not be as bad, but if the uncertainty persists, the damage could potentially be worse, because we should not expect the same kind of recovery that we saw last year, where when the lockdown was lifted, there was a sharp recovery that took place. It may not happen this time around, because there are no triggers like lifting of lockdown.
Upasna Bhardwaj, how do you look at the situation panning out? I mean, both reports and the general consensus is that FY22 depends on two factors. One is whether the rate of infections continues to go down steadily and we don't have a third wave, or we have a minimal third wave. And the second and most important factor is the pace of vaccination. Now, the government is reiterating again and again, two union ministers have said it, today the ICMR chief said it, that we will vaccinate all adults by December. Do you A, think that's feasible? B, if that is the case, do you see economic recovery at a much better clip?
Yeah, Tamanna, I think I would agree with Dr. Sen. There is a lot of uncertainty this time around as against last year. So last year, after the first quarter strict lockdown, there was a sharp revival in activity because somewhere down the optimism was much more, and the risk of additional or incremental infections at that point did not really exist. Today, where we stand, there is this hanging sword of a third wave, which for now we may want to assume, but we don't know exactly what is going to be the magnitude of the third wave. So we will have to really see how it really progresses. There is an element of uncertainty, which means precautionary savings could be rising. Already the unemployment rates are reasonably high. If you look at overall, it's around 12%. Urban employment is around 16-17%. So things are not looking good. The consumer sentiment remains extremely weak and uncertain. So I think the recovery pace this time will be much slower as against last year. And that is where we remain skeptical. But you're right, it will be a function of how the vaccination pace is going to be. I would not be the right person to comment on whether we will be able to really, vaccinate most of the population by December, because there are supply issues for now. There are right kind of noises which are coming, which means the supply disruptions. They're trying to work towards erasing the supply issues on the availability of vaccines. So even if we assume that a reasonable proportion of the population is vaccinated by end of this calendar year, if not all, then I do expect a revival in activity to begin only from the end of third quarter of this financial year. So then, next 2 quarters, basically, at least, we do expect the momentum to remain very weak. And that's where the problem lies. But having said that, I think there are 2 positives I would still like to point out. One is, of course, the global demand, which is holding up pretty strong, which means exports normally should hold up and be supportive of growth. And the other is we are still not seeing that kind of a pessimism building in the corporate earnings projections that we are seeing. And that is something which will be holding up the GDP data as well, at least in the initial rounds of data recording. So corporate earnings downgrades have yet not happened. We are still seeing most of the corporates have deleveraged, and they are still relatively looking at a double-digit growth. As long as that happens, I would say that there is a cushion to overall downside that we are talking about. And that is one of the reasons why we have maintained we have downgraded our GDP number from a 10% to a 9%. As of now, we stay at 9% because we do see these 2 factors somewhere supporting growth and the recovery becoming slightly more better in terms of sequential improvement towards end of the year, not before that, Phil.
Indranil, if I look at the V-shaped recovery that we saw last fiscal from around Q3, driven in large part, some said because of festive demand, pent-up demand, etc., but it was consumption coming back. Do you think that will be hit this time around also because of the nature of the second wave? A lot of spending families, if I may put it that way, have been hit by the disease in the second wave. Healthcare expenditure has gone up. Your middle-class consumers have been very, very badly hit. Do you think that those effects will linger on?
Yeah, so I think you have more or less said everything that I possibly wanted to say. So there can be, I would divide the consumption into 2 buckets. One is the discretionary spending, which is basically the one that you were talking about in terms of the medical bills having gone up, precautionary savings thereof having gone up. Very unfortunately, a bread-earning member is no longer there, possibly in the family. So those are the families in the urban category which have possibly been very severely hit. And from their perspective, discretionary income, discretionary expenditure may actually be lower. The second issue, of course, is that brings back to Upasna's point in terms of the vaccination. I'm not sure how many of us, having seen the intensity, so after the first intensity, we were very confident that the virus has gone away. But after seeing the intensity and the depth of the damage that this virus can do, not only in terms of the spread, but in terms of the effects that it has on the health, I'm not sure how many of us is ready to go even to a cinema hall or for that matter, a mall, even if as you open up the economy in a very significant way. So from that perspective also, I think discretionary expenditure is likely to be hit in a certain way. Second is the essential category. Now, if you really look at the data, I think what is really also happening is that this time the virus has penetrated the rural areas in a very significant way. And the salaried people in the rural segment are also losing out on their jobs in quite a significant way. So I would guess that the overall the demand trajectory for India during the normal times was based on aspirational demand, which of course included the discretionary items. But I think the way the overall pyramid is shifting lower in terms of people graduating down to almost where they were maybe 3 years or 5 years back could actually have its impact on the essential spending also, rather than only the discretionary spending. So I think this is quite a long journey for India. And even before the second wave, I was not very confident of a double-digit number of growth. Now, very unfortunately, growth has become a number game at this point in time, and that is possibly we look at who is a double digit and who is not a double digit. But I think the depth of the damage that it has done to the economy, especially in terms of the economy not being adequately covered from a social security perspective also, is, I think, probably has not been fathomed with the data that we generally look at. And that is, I think, the point that needs to be taken very seriously as we track the journey for the Indian economy going forward.
You know, last word from you, Dr. Sen, and I request you to just speak a little louder. What can we do going from here? Now, former Finance Minister P. Chidambaram held a press conference today and gave some suggestions, including increasing spending. Do you think it is time now to open up those purse strings and try to push more stimulus?
The situation is such that a very clear delineation of what the policy measure should be is actually pretty difficult. Last year, things were fairly clear. The supply side unlocked very quickly. The demand side was the worry, so a demand stimulus is what everybody was advocating. At the moment, things are not so clear. We really do not know whether or not the supply side, the production side, can actually respond to a demand stimulus, because you may be having episodic lockdowns happening all over the place. So the policy response will have to be nuanced, and it has to work lockstep with what is happening to the pandemic mitigation efforts. So if you have states where a lockdown is happening, putting a demand stimulus out there is not going to help. But it will help in states where the supply side is open. The point is, this cannot be done as a national central government policy. This requires close coordination, almost a daily coordination between central and states. Unfortunately, over the past 1.5 years, we've seen very little of that kind of coordination happening. And I don't really have any hopes that it's going to happen in the future. But in its absence, we will really be shooting in the dark.
Yes. It's an unfolding story. It's an ongoing challenge, no doubt, and it's linked very closely to what happens with COVID-19, what happens with vaccination as well. Of course, we'll be keeping a close tab on it. Thank you so much to all of you for joining us on the India Development Debate this evening. For those of you still tracking the story of Class 12 students, the ICSE board has also come in with an announcement that following what has been decided for the CBSE, they will also be cancelling their examinations. We'll take a very short break. That's all the time we have on the India Development Debate.